Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the OPEC Joint Ministerial Committee meeting and the potential opportunities to trade crude. My name is Sasha and I'm a financial analyst from the research department at 4Trade. I'm delighted to have you with us. If you have any questions, please call us and ask to speak to a senior account manager who will be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. And now let me explain what a market opportunity is if you don't know. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade in the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis, which includes a pivot point and support and resistance levels. It's important to understand it's your decision whether you want to trade on market opportunities or not. So here's an example of a market opportunity. You can see fundamental analysis on what's going on with crude oil. You can see, for example, how Saudi Arabia says it will make up the shortfall of oil in the market due to Iranian sanctions. This could apply downward pressure to crude prices. As you can see, this is a downward opportunity over a weekly period. When using a market opportunity, it's vital to look at the pivot point on which the calculations are based. In this instance, if the price reaches the pivot point, the current price you can see in the center of the screen here, this shows the right moment in our estimation for opening a trading position. When using a market opportunity, it's vital to look at the pivot point on which the calculations are based. In this instance, if the price reaches the pivot point, the current price you can see in the center of the screen here, this shows the right moment in our estimation for opening a trading position, had you decided to trade on this market opportunity when it was active. You can see below the trend direction and the time period. It's also important that you know how to use the stop loss and take profit options. You have support and resistance levels further along. At these points you can put a stop loss and take profit, and further down you have calculations. If you close the position using take profit, you can expect these kinds of profits at the support levels in green. If the price is going against you, then you can potentially have a loss of this amount at these resistance levels in red. Finally, profit and loss calculations are based on a one-lot trading volume. Before discussing OPEC's JMMC meeting, it's important to explain a little about OPEC. So traders know it's important to understand the role of the Organization of Petroleum Exporting Countries, which includes many of the largest oil producers in the world, including Saudi Arabia, OPEC's key player. The organization generates some 44% of all world oil production. It agrees jointly whether to increase the production of oil, which should influence prices down, or to restrict oil production, which should help push prices up. Since 2016, the organization has successfully invited Russia, the second highest producer of crude, to join these agreements, even if Russia isn't formally part of OPEC. OPEC and Russia previously had an agreement to restrict the supply of crude oil. At the last full meeting in December, in the face of declining oil prices, OPEC decided it would further cut production by 1.2 million barrels per day, which eventually caused the stabilization and bounce back in crude oil prices. So Russia, the world's number 2 producer, and OPEC have considerable power to influence oil prices. Russia has not complied with its OPEC agreement and has not cut its oil production by as much as the country previously committed to. With soaring US production and high Russian production, oil prices have not climbed as much as was hoped by oil bulls. Saudi Arabia and other OPEC countries have, however, managed to prop prices up by decreasing their own production beyond its initial commitment. Saudi Arabia has been trying to work behind the scenes with other OPEC members to get Russia to agree to a more formal deal to be signed between Russia and OPEC in order to more effectively control production. Russia has resisted these moves so far. It's also clear to most analysts that Russia doesn't mind lower oil prices as much as OPEC, which would prefer that crude prices rise. The next OPEC meeting is on June the 25th, when the current production deal will be discussed. But let's talk about crude's price direction recently first. So let's take a look at the last volatile 6 months or so. On this chart we can see how crude hit a 3-year high in October 2018 of 75.84 before crashing to its lowest level of 42.71 since June 2017 on December the 24th. This was a staggering fall of 43%. Oil markets were oversupplied and exemptions were given to a number of countries, enabling them to import Iranian oil, which was subjected to US sanctions. Since then, crude has jumped close above an astonishing 35%, posting its best January performance on record and continuing to trade higher for the most part, breaking the 3-long losing streak that saw crude lose nearly half its value. So what are the reasons for the recent uptrend in crude prices? Oil has been boosted by the OPEC-led production cuts I mentioned, aimed at draining oversupply, and US sanctions on Venezuela, which threatened to disrupt global trade flows and bolstered prices. Despite earlier fears of an oil glut and an economic slowdown, investors felt that oil prices were priced too cheaply and bounced back to a 3-month high. The geopolitical situation in Libya with a military conflict on the ground has also helped push prices higher recently, as warlords have decided to use access to oil as a means of political pressure. Any disruption to oil supplies and conflict is supportive for crude. Markets were also supported by strong economic data in the US, which reassured investors that the slowdown won't affect the US this year, even if it's impacting China. This is important since any slowdown leads to a decline in demand for crude oil, pushing prices downwards. Finally, progress in US and China trade talks also pushed prices higher. The graph shows us that crude prices have indeed been volatile over the past 6 months, but OPEC and some analysts at least believe that in the near future prices won't be changing quite so much in one direction as quickly as they were before. In recent weeks, the most important factors affecting crude oil prices include sanctions on Iran and the crisis and sanctions in Venezuela, soaring US production, renewed trade war fears and concerns global growth will slow further, and fears that Russia does not want to restrict oil output. So on the chart here you can see how crude oil has been trading over the past month. Over this period, oil has been pressured after comments from Russia raised concerns that the OPEC-led supply-cutting pact may not be renewed. Russia and OPEC may decide to boost output to fight for market share with the United States. OPEC and other producers, including Russia, an alliance known as OPEC+, have been cutting output since January the 1st. They will decide at the full OPEC meeting on June the 25th to 26th whether to continue with the arrangement. Offsetting this, crude has been boosted by economic data from China, which suggests that the slowdown may have stopped. Alongside this, statistics from China, the world's second largest user of crude oil, suggest that demand for crude oil there is still growing. On the other hand, we most recently have seen trade war fears resurface as talks between China and the US proved fruitless for the time being, and President Trump imposed further tariffs on China last Friday, while on Monday the Chinese announced retaliatory measures of tariffs on the US worth $60 billion, which has rocked the markets. At the same time, crude prices have turned sharply higher after Saudi Arabian oil tankers were attacked in the Persian Gulf, with Iran being suspected of carrying out the attacks due to that nation's support of US sanctions against Tehran. So, as you can see on the chart here, that while we have had volatility, crude has been trading mainly in the $61 to $65 per barrel range. OPEC and other oil-producing countries led by Russia and Saudi Arabia will, at the May 17 to 19 JMMC meeting in Jeddah, review their agreement to cut down oil output by 1.2 million barrels per day. According to reports from Reuters, Saudi Arabia is having a hard time convincing Russia to stay much longer in an OPEC-led pact cutting oil supply, and Moscow may agree only to a 3-month extension. Russian Energy Minister Alexander Novak repeatedly has told his Saudi counterpart, Khalid al-Falih, that he cannot guarantee an extension to the end of 2019. Saudi Arabia and other OPEC members could be forced to consider continuing the cuts alone if Russia opts not to stay. It's unlikely that an official decision on this will be announced at the meeting. However, senior ministers from key countries such as Russia and Saudi Arabia will make statements on current OPEC thinking regarding OPEC prices, and questions will be asked regarding the current agreement and for how long it will continue. If reports are confirmed and Russia doesn't want a longer-term extension, it may put pressure on crude prices in the short term at least. But analysts will be looking ahead to the next full OPEC meeting, which will be held on June the 25th to June the 26th in Austria. It's at this meeting that the grouping is expected to officially decide whether to extend output cuts, bearing in mind crude prices over the next period. Of course, we at 4Trade will be following any developments that affect crude oil prices very closely, so please do get in touch with the senior account manager if you have any questions or want to take advantage of the trading opportunities that this event will present. Until next time, goodbye. Please join us again at 4Trade again soon.